I'm Laura O'Brien. I'm with Realty One Group Prosper and Modern Roots Realty Group team.
I'm Travis Gardner. I was going by the squares. It could look like it was going to me next.
You go.
Twice.
Gardner coming from you from the home office here.
I'm Amanda Rickman. I'm with the Modern Roots Realty Group team as well with Realty One Group Prosper. And a raccoon just walked in front of my window.
I wish he was still there so we could see him.
It just walked by again.
He did? You could give him some crackers.
So as y'all probably saw on our Facebook posts and events, just info in general is we've had a lot of questions come to us from people that might be looking to buy a house right now but not sure what to do, or kind of curious about how the market is and how showings are going during this COVID-19 time. So we kind of put together the questions that we've gotten most, and we're going to go over those, and then of course feel free to ask any questions that y'all have as well. And I know everybody has different situations that they're in, so please reach out to us and set up a FaceTime call with us or whatnot to talk about your own situation as well. So, okay, shall we start?
We shall start.
Okay, so our first question is it a good time to buy, and why now?
It is a good time to buy. It's still a good time to buy. Austin's market's still great, but Travis, tell us why it would be a good time to buy for the mortgage side.
Yeah, on just mortgage related, rates are really low. Historically, they've been low for a while. And last month or so when we were going through Corona, there was some uptick in rates, but now they've actually gone down low. So with good credit, you could be looking at 3.5 or maybe even a lower interest rate. I'm sure we'll get into this a little bit more, but there's down payment assistance programs out there that are still available to help out. And interest-wise speaking, it's a great time to buy.
Mm-hmm. And then just kind of what we've seen on the realtor side of things. In the past, I don't even know how many years now, the Austin area has generally appreciated over time. And even going through what we're going through now, looking at the statistics of how many homes are selling compared to last year at the same time, it's about the same, and prices have still gone up. So it all depends on what your situation is at this time, for sure. But if you are looking to buy and you decide to wait, values are still going to be going up. And I know that we've all heard that the stock market's been crazy. So if you're looking for a safe place to put your money, real estate is always good and has continued to be in this area at least. So kind of what we've seen.
Well said.
Yes, ma'am.
Next question.
Next question.
Number 2.
Okay. How do I determine my budget? This is a Travis question.
Yeah, so my favorite type of client to work with is one that will come with me and we work based off what they want their monthly payment to look like. Not, hey, what's the maximum I can get approved for? Because I can let you know based on different mortgages that you might be approved for X amount of dollars. But that doesn't mean you want that payment that comes along with it. So when you're getting you approved, it's basically, this is how we do it. Any debt that is listed on your credit report, like a car payment, credit cards, student loans, something that you have a monthly payment for that is reported, we take that up. Then we look at what an average housing payment might look like in Buda, Kyle, Austin, depending on where you're buying, because every area is different. And it gives us an idea of what payment and maximum mortgage amount you can afford, but we like to scale that back down to what do you want to pay for in a monthly payment. You know, buying the house is one thing, but living in the house and making it a home is something completely, you know, it's on its own. So you want to have some money left over with your housing payment to live.
Yeah.
Do you, oh yeah. Do student loans affect your likelihood of getting a mortgage, or how do they affect you?
Absolutely, they can. So student loans are looked at a little bit differently as other debts. A lot of times payments are on deferral, meaning we're not making payments at that point. Maybe there's a minimum repayment structure. So we do have to add in some sort of payments, against your overall debt ratio when it comes to student loans. It's not looked at as as credit cards or car payments. So there is a little bit of flexibility. And there are some loan programs that we can actually reduce the amount we have to cover for your debt on there. So we can get really creative with those student loans. But short answer, yes, they will come into play. But we can look at it and see what your situation looks like.
Okay.
And then once you and your lender come up with an overall budget of what you're trying to spend, that helps us on the realtor side set up your searches and kind of determine what homes to look at. And then when I know Travis does this, but each neighborhood has different tax rates. So if we come across one that's really close to your budget or maybe a little bit over, we can send him all the information about that particular home, and he can run the numbers on that home. So we can make sure that you...
Yeah, and that includes the HOA too. It's something that you need to think about when you buy a home. If you're buying in a an HOA community, that's going to be a monthly or quarterly obligation that you may have to take care of.
Mm-hmm. For sure.
Mm-hmm.
Anything else on that question?
I don't think so.
Okay. How much money do I need to buy a house? This is kind of all of us.
Mm-hmm.
So, Laura, do you want to talk about like the upfront costs, and then Travis can go into like down payment and the different loan kind of programs?
So once you nail down a house and you've submitted an offer and everyone's agreed and you're under contract, you have your option money, which is typically, between $100, $200 or so that you give to the seller, and that in exchange gives you some days that you have to get your inspection done. You pay for the inspection, which is typically about $300 to $400. It just depends on what all you're getting inspected. So you have that. And then also you have your earnest money, which is 1% of your sales price. So if your sales price is $300,000, then you're putting $3,000 down to the title company. And that's really what you're paying for right there up front. Option, earnest, and inspection.
Yeah, those are your like very upfront costs.
Very upfront, yeah.
Going through the loan process is typically around 30 days, and then Travis can talk to you about kind of the down payment.
Right.
Yeah, lots of loan programs out there, especially for first-time home buyers. And so part of my job is, is financial consulting, but also going through all of those thousands of programs to see what's going to work best for you. Typically speaking, a minimum down payment is anywhere from 3 to 3.5%. But sometimes we have loan programs that might have 0% down. Or sometimes we have programs that might be able to assist with that down payment. So maybe the down payment is 3%, but we get you a program that covers that 3%. So when we know more about your specific situation, we'll work that game plan out for you. But just a general number to keep in mind is around 3.5% of the purchase price. So just take a purchase price, multiply it by that number, and that's a good idea to have. If you don't have that number, again, we have options to maybe look at down payment assistance programs for you.
So let's talk about closing costs, because sometimes people get confused of their down payment and closing costs. Is that the same? Let's talk about that a little bit. And what does a buyer's closing cost entail?
Yeah, great question. So an easy way that we like to call it is, what is my cash to close? And what's it going to take to put those keys into my hand when this is all done? So your down payment is part of it. I consider half of it. And that's a pretty easy number to figure out, just like we talked about. 3%, 3.5%, maybe 0% of the purchase price. So pretty black and white on those numbers. As far as closing costs, that number is a little bit of a moving target, and here's why. Some of the fees are flat fees. Any lender you work with are going to have their black and white fees, whether the loan is $50,000 or $500,000. You have black and white fees to pay bills, pay employees. Other costs are third-party costs, which may be your appraisal or your title work when you choose your title company of choice. When you go buy a home, you buy a year's worth of insurance up front. So that's a variable because we don't know what your insurance plan is. So once we get all of those numbers together, that kind of gives us an idea of what cash to close is. Closing cost, down payment come together for cash to close. And that kind of lets us know where we'd be at. Normally, maybe about 2% of the purchase price might be your closing cost. But in real estate, you know, things are negotiable. And sometimes the seller takes care of certain closing costs and sometimes the buyer does. And based on the property, well, maybe it might change on certain, you know, line items.
Mm-hmm.
So a little bit more of a moving target. Also has to do with your purchase price as well. Your closing costs will be affected by that. So once we know a little bit more about your situation, we could really try to zero in on that number for you.
And lead into our next question of,
I was about to ask you, Amanda, is it realistic for a seller to pay for closing costs right now?
so honestly, it's very situation based, and there's ways around it to still get your closing costs paid by a seller. If they don't really want to budge, you can always ask for a certain amount in closing costs and then bump the price of the home up if nobody can come to an agreement on that. So there's ways around it. The only thing that kind of may kick you a little on that end is if the house will appraise after you bump up the price, the amount that that you're asking for in closing cost. So you just want to make sure that whoever you're working with on the realtor side price the home correctly to begin with. If there is like, or how pull comps to make sure that the home is priced correctly. And if you do have that wiggle room to kind of offer a little over to get those closing costs paid. So, but we really are still sitting in a hot market, but I'm still seeing, like, right now with the Corona stuff going on, it's not more of like people wanting to buy and wanting to move right now. It's more of the people that are having to move that we're seeing. So I think there's a little bit more wiggle room on the seller side if they have the wiggle room to help with closing costs.
And I would just add, like, that's a perfect, you know, example of why your lender and realtor need to work good together. Because if are something that are, you know, you're important about and trying to get paid for, you know, we can look at the individual house and scenario and kind of figure out if we have, you know, a way to make that happen for you.
Mm-hmm.
And we will bend over backwards to make something happen if we can make it happen.
Oh, yes, absolutely. Definitely.
Okay, next question.
Cool, next.
A lot of people have this question, and that is, what is included in a house whenever you purchase it? So, I mean, basically what I tell people is if you pick up the house and you turn it upside down and shake it, anything that sticks in there, it stays. So anything that's physically attached, which strangely enough includes curtains and curtain rods.
Mm-hmm. Mm-hmm.
Unless they're included. But so the biggest question people always have is like, does the stove stay with the house? The stove really does.
The stove might be shakeable though. It might shake out a little bit, but that does stay.
Things like refrigerator, washer, and dryer, those are things that
Mm-hmm.
for sometimes water softeners as well.
Mm-hmm.
There's just different stuff that doesn't typically stay, but you can always ask for in your offer. So
Yeah, it's totally negotiable. I just had a listing that we sold everything. It was cash. They wanted all the furniture, absolutely everything, which was interesting. We had to kind of actually nail down the things that would go because there were personal items and personal like pictures and food and closet stuff. So it's kind of weird to decipher what stayed and went, but yeah, I mean, everything's negotiable. So
A couple of years ago, I had a client who had to agree to take care of the neighborhood cats for the seller when they left.
wow.
Yeah, so again, and every situation is different.
Yeah, it is.
I had a
Oh,
ranch deal like this past year that I put chickens on a non-realty items addendum. Chickens and goats. And
yeah.
I'm like, that's different.
Yeah, I remember that.
Renting versus buying, again, this is very situational. And anytime that I have somebody that's looking to rent a house, I always have kind of the same line of questions as to like, well, is there a reason that you're renting other than buying? Are you going to be staying in the area at least 3 years? And then kind of talk about your credit, and everybody is totally different. But like I said earlier, I mean, real estate is not a bad place to put your money right now, especially in our area. So say you were going to just stay, I don't know, a couple of years. I mean, you're still building equity in your home. And if you're going to move from that home, we're already seeing people at least like turn a little bit of a profit after selling after a couple of years. So
that one buyer I was just talking about, he bought last year, didn't even own the home for more than a year, honestly, and probably made a good 5 to 10 from it. So yeah, I mean, it happens.
So it just comes down to your situation, whether you're going to stay in a certain place for a while, or if you're just really unsure of maybe renting is best for you. You just don't know.
Yeah. Ow.
But I don't know. You can go more off of that too.
Yeah, Travis, actually, if I had like a credit score in the 500s, could I still buy? Are there programs for me? Is that?
Yeah, so there are programs out there. Typically the baseline is 580. You know, you need to be in 580 to get in the game. Our goal is to at least have you to 620. Some of those down payment programs I was mentioning, there's some other first-time homebuyer programs that we haven't gotten to, but 620 unlocks a lot better potential. I will say this, out of everything that's involved in getting approved for a mortgage, the credit score is the most fluid. And there's, you know, you can't go out and just have more time on your job or go out and make more money, you know, instantly. But there's tips and tricks we can do to try to help that number, you know, whether that's, you know, helping out with some medical collections. There's some tips we can do on that. Or maybe it's paying down the right credit card. Maybe it's even just opening a credit card and letting it do some work. So if your score's in the 500s, 400s, wherever it might be, it's never too late to start a plan. And we work with clients that sometimes it might take 6, 12, 18 months to get there, but those are sometimes the most rewarding ones to work with that really put in the work. And good people can have bad credit. And so I've seen a lot of things, and we can come up with a plan to help you.
So has any of the credit scores for different loan programs changed with the COVID-19 stuff?
So I had seen, and that's more of kind of a lender to lender thing. There's, you know, with COVID, and there's been a lot of changes, you know, in our world, and the mortgage industry is not immune to that. So right when it, you know, I'd say about 3 weeks ago, a lot of changes happening in programs. Maybe your programs went from 580 to 600, or maybe some lenders just stopped offering some programs because they just needed to catch their breath or didn't know what the market's going to do. I feel like if there were changes there, some of those will probably come back. We really haven't had any changes on our side, so I can speak for Guild. Some of the down payment programs haven't really had any changes, but I have seen, you know, that some lenders have made adjustments to credit scores or programs or qualifications. Yep, definitely.
Well, I have a listing right now that I have a basket on the front porch with little booties, foot covers with wipes. We're asking for everybody to wear a mask or some sort of face covering, like a scarf, bandana, something. If you don't have a mask, not everybody has a mask. And then, you know, not to touch any surfaces. We're asking this particular, it's not the owner living there, it's a tenant. So we're asking them to leave the lights on and leave the doors open so that it just minimizes the amount of touching needed, and wipe down the surface once you're done, and, you know, try to keep everybody safe from each other.
Yeah.
So
people are even doing virtual showings right now.
That too.
The amount of people in the house. And I had one a couple of weeks ago that the homeowner actually FaceTimed the realtor and her clients, and he took them through the house, which was interesting. So, because he's an older gentleman, but like he really can't have anybody in his house. But so yeah, I mean, there's definitely ways around not physically going to things, you know, and it's just been interesting. Even like having buyer consultations and stuff. Like, I'm sure Travis, you've probably talked on the phone a little more.
Yeah, definitely. I mean, just to kind of go to the question, you know, as far as Guild Mortgage, we are a financial institution, so our office is still open, but we basically asked all employees to work at home that can. So some of the critical functions that just have to be done at the office are there, but for the most part, our staff is not there. Certainly, you know, coffee meetings, after hour meetings, those have kind of stopped for now. A lot of phone call consultations, Zoom calls, you know, things of that nature. As far as, you know, our process can be done a lot and whatnot, but the physical interaction has certainly been put on hold. Going to closings, you know, we don't go to those anymore.
No.
A bummer. That's the best part of the whole process. And even your appraisers that are going out to look at properties, sometimes they're doing what's called exterior appraisals. So if the property qualifies, they don't even have to go into the house. So I'm just trying to make things safer for everybody.
Mm-hmm.
How does a property qualify to have a drive-by appraisal done? Because I have a listing that just had a drive-by appraisal.
Yeah, it's typically the loan type.
Okay.
Mm. Like a conventional, would it be just
Yeah, more of a
conventional?
conventional.
Okay.
Yeah, and if it's a refinance, that's kind of a whole other thing with refinances and whatnot. But normally it's just your loan type, and most appraisers are really hoping to do these drive-by appraisals right now. So.
Yeah, yeah.
I was hoping that it's just like, it means the house pretty much does appraise for the amount that it.
Yeah, I've had a few already. I was slightly concerned of maybe we might get a lower value because they didn't get to go in, but they've all come back fine. So.
Cool.
Awesome.
That addendum that we're seeing go on the back of contracts, basically it's kind of, it's protection for both parties, the seller and buyer side. It's basically granting a 30-day extension due to all the COVID-19 stuff, things going on, like with people, if people are using a down payment from their, like from their stocks or something, and there's things happening with that. If somebody unfortunately gets laid off, I mean, it grants an extension for that. So lots of different stuff that might help with, but it's overall protecting both sides.
Mm-hmm. Mm-hmm.
Just with all the uncertainty.
Yeah. So if I am just not necessarily a first-time home buyer, but I'm thinking about buying a house. So where do I start? What do I do? So I want to buy a house. I don't know anything about my sales price. Do I contact you, Amanda, and then you would hook me up with Travis, or what would I do?
So people tend to do that first. They tend to reach out to a realtor because everybody typically has a friend that's a realtor, or they know somebody that knows 18 realtors.
Mm-hmm. Yeah.
Everybody always wants to buy a house. No one wants to go get a mortgage. So,
yeah, that's true.
first, yeah.
But honestly, like that's not a bad route to go because all the realtors in the area have worked with so many lenders, and they know ones that they've had good experiences with and ones that they have not. And so whenever you're going to have somebody going into your like personal privacy, I mean, don't you get people's blood types, Travis?
Yes. Yeah.
You want somebody that you can trust and feel comfortable with. So as long as you feel comfortable with your realtor, they usually have some good referrals for lenders for sure. So that's where you would typically start, is talking to a realtor, kind of getting the down low of how the process works, them connecting you with a lender, and then going from there to determine what like everybody's good with.
Yes.
Yeah, and then once we get connected, you know, we just talk kind of about your goals, your plans, and kind of feel, you know, what you're looking for the future. And then really after we've had that conversation and talked some basics, the first official step is getting an application. And that really lets me dive into everything, you know, start looking at programs, seeing what monthly payments are going to work for you. And then ultimately what we want to do is work towards getting you fully pre-approved. So maybe you're not going to be buying till the summertime, but what we want to do is go ahead and get you fully pre-approved for a couple of reasons. One, we've done all the groundwork of what goes on behind the scenes for a mortgage. So if there were any questions that needed to be figured out, or things that just might take a little bit of time, we'll get that done. Number one, that keeps you feeling secure that you're pre-approved and ready to go when the time's right. And two, it gives you a leg up on the competition that you're already fully pre-approved. And when you do find that perfect home and Laura or Amanda submit that offer, your letter is going to say that you've been underwritten by an underwriter at Guild Mortgage, you're fully pre-approved, you've basically gone as far as you can go without getting a home put in your name yet. And that is commit you to anything. It doesn't cost you anything. It just lets us put you in the best possible position.
So what do you need from me if I want to get just pre-approved? Like if I want to get just a pre-approval letter, what exactly do you need from me besides filling out the application?
Nowadays, I mean, an application definitely is nowadays, sometimes I can do a lot of the verifications online. So that, you know, back in the day, maybe it used to be, give me your 2 pay stubs, 2 W-2s, 2 years of tax, the 222s, tax returns, 2 years worth. But nowadays we can do online. So you know, I don't like to just give a blanket list of what we need for everybody, but normally the basic things are, you know, your income and your asset information, maybe your bank statements, your paychecks and your W-2s. But once we look at your individual file, it's definitely my goal to make this as easy as possible for everyone. So if I can prevent you having to send the information and I can get it done myself, I certainly will.
And so when I'm pre-approved, I'm not like fully approved. I still have to go through like the process and go to the underwriter and all that stuff. And sometimes conditions sort of have to be met. And I mean,
right. Yeah. So when you get fully pre-approved, we've done what we can do. And say that we get you pre-approved in May, but you don't find your home till July. Well, we may need to get some updates from you, like maybe your next pay stub, or maybe we need to reach out to your work. But for the most part, if we have you fully pre-approved, we feel that you're ready to go out and purchase. And once you go under contract for the home, think of a mortgage as a 2-part process. You know, you're getting approved and the house is getting approved. So we've got to order the appraisal and we've got to make sure that the home is, you know, meets value and there's not anything in there that would stand out like a hole in the roof or foundation issues. So that full approval does kind of come at the end of the process, but it's, you know, our job as trying to be a good loan officer to make you feel confident in that we've got a loan the entire time. I mean, we know that this is your life, your family, and we're not just, you know, rolling the dice to hope you get approved. We feel pretty confident that you know, things are looking good. We've got a good plan for you.
As long as we don't buy a boat right before closing, right?
Yeah, don't buy a boat. Don't buy after closing. You know, live it up. Buy the boat. I'll come ski with you. But yeah, just try to keep things as normal and mundane as possible when going through the mortgage process. Don't get a new car. Don't try to, you know, get your job just yet, unless it's for the better. Talk to your loan officer. But for the most part, just try to keep this, you know, real even keel.
is there a big difference between condos or single family homes? Is there a difference?
Who's first?
Y'all go
I'll go
first.
first. I'll go first.
Go.
So yes, there is. As far as getting you financed, the loan programs will be pretty much the same. Getting approved, you know, is pretty much the same. There is some behind the scenes stuff for us on the condo side that we have to look at. Mainly when you buy a condo, you're going to be in an HOA. So there's some stuff we have to verify with them. The one thing that I see a lot with condos are the HOA dues. So you want to make sure that, you know, maybe you do find a, you know, great condo for you, but if those HOA dues are a couple $100 a month, that might change what our budget looks to be. So approval process, not really, pretty much the same home, payment wise and whatnot. Let's definitely take a look at that individual condo.
I was going to bring up the HOA dues because typically they are more. And then some condos differ in that. Some of the condo fees cover just everything on the outside of the home. Some are kind of, and insurance works differently too, especially if they're attached condos with like roof insurance and different stuff like that. So there's stuff that differs for sure. And what is being warrantable?
Warrantable and non-warrantable.
Yeah.
Yeah. So that's basically, we want to make sure if you're buying a condo that is strictly bought by mostly investors for people renting it out, sometimes it could come up and create a little bit of a hurdle. Some of the rules on that have been laxed lately, so it's been easier to get through that process, but it's just another thing to keep in mind if you're buying a condo where mostly people are living there as their homestead, or people buying condos and renting these out to students, maybe by the UT area or Texas State or whatnot. So another thing your agent and I would look at together.
Right. Then I know I had a condo listed and the sale ended up going through, but the lender So they look at like what's been budgeted for the year for the condo,
Yep.
like if there was things that were taken care of with all the condo association fees on the outside, say they like repainted the whole complex, they have to make sure that there was enough in the budget for that before they actually lend on the condo.
Yeah, if the condo was in a lawsuit or something, that could help prevent you from financing. And it's really for your protection. You know, we're not trying to be hard about it. But yeah, there are a couple extra layers of condo, but it's not scary. You know, we do them all the time.
The overall buying process is the same as well. Like you still, a different contract form, it's for condos. And you request the condo association information up front. And yeah, but other than that, it's, you still put down earnest money, you still get an option period, you still get to do an inspection, and all the things.
All right. So Travis, how can we get a hold of you?
Yeah, best way to reach me is call or text me 512-808-3024, or you can shoot me an email at tgardner, it's my last name, Gardner, @guild.
Awesome. And you can reach us on our Google number that reaches our entire team, which is myself, Amanda, Jen Baker, and William Bubba Wimberly. 512-814-5478 is our number. So we would all be happy to help you with any questions that you have. So.
And feel free to visit our website, modernridgerealtygroup.com, to learn more about our team and where we come from.
Yeah.
So, yeah.
All right. Well, we don't have any
Very
more
cool.
questions. I guess we shall be done.
Thanks for having me.
Yeah. Thanks, Travis, so much.
Yep.
And thank you everybody for attending.
Yes.
Yeah, thank you very much for you came. Yeah.
Yes. Appreciate it. Hopefully we
That came by, but
next time. Next time. All right, guys.
Bye.
Adios.
then.